Ladies and gentlemen, hey, what's going on? This is Mike Price, president of LTI Mortgage, the hybrid agent. And what I'm doing here is I'm starting a new series on videos, new video series about the components of the loan. So we're going to talk about the down payment, the closing cost, and everything that goes on about the loan, interest rates and all that good stuff. All right, but in today's video, what I want to talk about here is the actual down payment. All right, now there's a lot of information out there that you can find, but I'm gonna give it to you right here so you don't have to go search for it. But the biggest misconception that I want to uncover right now is that you do not need 20% to purchase a home. A lot of people think that there's still a lot of people out there that think, hey, you got to put down 20%. And I wanted to ask you a question, man. 20% is a lot of money. All right, and so if we're looking at, just say with today's prices, if we're looking at, just say a $400,000 house, right? And 20% of that is $80,000. And yes, I did do that math just to make sure that I had it right, and I've done this 1,000 times. But we're talking $80,000. Ask yourself a question. How many people have got $80,000 just laying around to put down on the home? So get that out of your head. You do not need 20%. At the end of the day, all you really need is 5%, all right? And in some cases, if you go FHA, you can do 3.5%. Now, what the down payment is, and let me backtrack here. What the down payment is the down payment is the portion that the lender is going to require that you have into this whole transaction. So basically, that is your, what we would call in the business, that's your skin in the game. All right. So you're going out, you're asking somebody, hey, give me $400,000, and they're asking you, hey, we'll give you $400,000, but you're going to put $20,000 of your own money up. All right. And what that does is that kind of eliminates some of the risks on the lender's end. If you're putting down, just say on an easy case, we put down 5%, right? So you're buying a $400,000 house. They want you to put down 5%. That 5% is $20,000. That tells the lender, hey, this person is serious. They're not coming in here. They're not asking me for 100% financing. So if for some reason that you are not able to make that payment, you've got $20,000 invested in your own money. They're looking at it and saying, hey, this person is not just going to walk away from $20,000. And that's 5% on a conventional deal. All right. So then you've got FHA. Now, the minimum down payment on an FHA deal, 3.5%. Okay. So with FHA, you can put down a little bit less money. The qualifications are a little bit looser than it would be on a conventional. That's why they allow you to put down 3.5%. All right. Now that's a long way from 20%. So now you're buying a $400,000 house with only 3.5% down. Okay. Now there is a conventional loan out there that allows you to put down only 3%. It's got some income restrictions. It's got some location restrictions and all that. Probably if you're married, you're probably going to be over the income cap if both of you guys are working. But you can do a conventional deal with 3% down. All right. Now there's also USDA. Now USDA allows for 0 down payment, and USDA is only available in certain areas though. Most likely those are going to be rural areas, and you're going to kind of be farther out from the city. You're not buying a house directly in, say, Dallas, Texas, or New York City, or Austin, Texas, or wherever, and using the USDA loan. You're going to be on the outer skirts, so your drive to wherever you need to go is going to be a little bit further. However, you can get in this deal with $0 out of pocket for the down payment. That's not about closing costs. We're going to cover closing costs in a completely different video. But we're talking down payment. You can literally buy a house if you qualify. If you meet that income cap, it fits in the area, and your debt ratio is in the right range, you can get a USDA loan for 100%. No money out of pocket. All right. Now you also have VA. All right. Now with VA, 100% strictly for veterans. If you're not a veteran, you're not getting a VA loan. VA allows for 0 out of pocket. All right. Same as USDA. But however, if you're a veteran, VA restrictions are a lot looser than, say, the USDA the USDA loan. So you're going to be able to go up to a little bit higher debt to income ratio if you're looking at a VA loan. All right, VA loans are awesome. They don't have a lot of the MIP or the PMI that a USDA loan would, or a conventional loan. So if you're a veteran out there, definitely 100% use your VA status if you absolutely have it. All right, then we've got, what have we talked about? USDA, conventional, FHA, 3%. I think I actually covered all of them. So you've got your conventional, your normal conventional, 5% down. Put down 5%. FHA 3.5%. USDA 100%. Income restrictions, location restrictions. VA obviously got to be a veteran. Now jumbo, we got some jumbo. I've got some jumbo lenders out there that'll let you buy a jumbo loan with only 3% down. I know that sounds insane, but yeah, it's available. Most jumbos are going to be at least 10% down, but you get to see the differences. But my real reason for shooting this video is to let people know, hey, you do not have to have 20% down to purchase a home. That is a lot of money. Average price these days in Dallas probably about $400,000. Once again, $80,000. Nobody's dropping 80 grand on a house. Some people are, but they're probably selling another house in order to do that. However, if they do have it, you put down 20%, you can get yourself out of PMI. But there's ways around that as well. But hey, here's just the start of a video series, just telling people about, hey, the down payments. Here's what you can expect to pay. Here's what you need. The next video, I'll go into actual closing costs and how the amount of money goes from the minimum down payment of just say 5%. So that what 20 grand, all right, of 400,000. To you needing an extra $5,000 or $6,000 to actually pay the closing costs. So that's how you come up with, hey, buying a $400,000 house, you're going to need about $26,000 down. All right. But hey, once again, Mike Price, president of LTI Mortgage. I hope you guys are enjoying this because I'm planning on, or I'm hoping to educate some people and just let people know the ins and outs of the mortgage. Look forward to speaking to you soon. Take care.